Ladies and gentlemen, welcome to a new episode of the FinTech Hunting podcast. We've got an amazing guest for you today. He doesn't need an intro, but he's going to sure as hell get one. He's an industry thought leader, a tech innovator. He's got a wealth of industry and lending technology experience. He's got videos. He's a speaker, and he is a dear friend. Please help me welcome back to the show, Kevin Perenio, Chief Lending Officer at PRMG. KP, welcome back.
Thank you, brother. I love being on FinTech Hunting. Fresh off a hunt, New Orleans, Miami Brickell, a Miami trade show, and then 2 more nights in South Beach. We're on the hunt out there. It's a new year.
Well, let's talk about that a little bit. You always have great insights. So what were some of the observations? What are the things that lenders are talking about? What are the vendors kind of promoting? Where's the industry at right now?
Well, it was a good vibe in New Orleans at the Mortgage Banker Association. They kick off the year with their independent mortgage banker show, the IMB show, and this year was in New Orleans. And I did a little scouting trip in New Orleans on New Year's for the Sugar Bowl. My Longhorns back here, they freaking lost, but I was half dreading going back to New Orleans because, as you know, it's go go go. It's late nights. It's lots of heavy foods. Came back from the Sugar Bowl weighing the most I ever weighed in my life and immediately went on a 5-day fast. I lost 12 pounds. I weighed myself this morning. I'm still 9 pounds down from New Year's Eve, so I'm feeling good about that.
That's awesome.
Yeah, even got this little schmedium shirt on. But the vibe was good. The vibe is good. It's a new year, and I was saying it like almost immediately when I got there on not just Monday night, but all day Tuesday. The people that go to these conferences, they're diehards. They're not going anywhere. We're all in. We're trying to build our businesses no matter what the industry throws our way. And so the vibe obviously is a little better than Philly, the national convention the NBA puts on, because, you're in October, you're in the height of mortgage interest rates that had gotten up to 8%, I've only been in the business about 23 years, but October was the highest I've ever seen rates, ever. And I know those people like, I remember when, blah, blah, blah. Yeah, but I don't care. Like, I never saw it worse than that. and it'd been 23 years since it had gotten that high, right? And so the mood in Philly, people started saying survive to 25, and I hate that. I hate negativity, and I hate it. First of all, I know things that rhyme. People get real catchy and they want to say it, but that's a commercial real estate thing. That is that survive to 25 is a saying that comes out of the commercial real estate market, which they have some real issues to deal with. 19% occupancy in Class A building. You've got certain areas are overbuilt. Loans coming due, the numbers might not work out, so those are non-recourse loans. Keys get handed back to the banks, and so is that going to create regional banks? Now, to be fair, there are some of those regional banks that are in our business. They're part of our intermediaries or lenders. They're part of the warehousing structure. So, for them to be worried about it, I get it. As an independent mortgage banker, we do mortgages. That's it. We're in the communities. We're building people's wealth, multi-generational wealth, and we're trying to get first-time home buyers into a home. So yeah, we all got problems, right? And so we don't want to hear about that commercial real estate problem, as an IMB. And so with rates coming down since that convention and locks up, and like noticeably January, everyone's saying this January is going to be better than last January, and it's New Orleans and it's the Independence. It was a really good vibe. So I thought it was pretty cool, and just it felt good from the onset. As soon as we landed in New Orleans.
Excellent. Well, as we talk about, there's more optimism. What are some of the opportunities that you see in today's market? Are there any challenges that we still got to be on the lookout for as we come roaring through in 24?
Well, they, bulls and bears, right? Positive or negative. How do you look? What's your outlook on our industry, on life, on the markets? Bulls seem to, climb a wall of worry, right? Like, I'm worried that we're not going to make money because we didn't just make as much as we wanted to the last year and a half or 2 years. I'm worried that, inflation could come back. I'm worried that the Fed could we all got worries, right? Okay, yeah. Great. No problem. List them, get it off your chest, but then let's get back to work. Let's go build our business. Let's get new business. Let's go hunting for something that's going to help us build. So I think people are still kind of worried about cost, and they're cost conscious. Every time I've gone through this part of the cycle, I noticed that a lot of C-level executives For the first 6 months of this year, we just want to get back to making some money. We don't want to hire and lean in and overbuild again. We just came out of that overbuilding phase in 2020 and 2021. Still kind of deleveraging down from that, if we're being honest. So I think people just want to get back to taking a sigh of relief, having a good market that's giving to us and we're producing in return. But as it relates to technology and new initiatives, there are those that continually invest, which is something that we always do. We're constantly investing, constantly trying to find something and build for the future, especially if you have a long-term vision. And there's some that wait for the market to give back before they decide to invest. And that's okay too. I mean, everyone has to do what's right for their own mindset and their own business. There's a lot of opportunity. There's a lot of movement out there. I like to say, recruiting season, it's almost over, as it relates to the origination front. Some people will argue with me, well, it's not a recruiting season. You're always recruiting. Yeah, you're always recruiting. You're always talking, but
when are you hiring?
Yeah, exactly. I mean, the peak time when someone is going to leave their company is not like in the middle of April and May when they're busy up to their eyeballs. It's not when the Fed just cut the rate and all those rates are going like crazy and all the stuff you've built to have your platform to catch it all at that moment, years of building into it. Like you don't want to leave that at that moment. You leave it when the down cycle first starts. And so there's still lots of recruiting. There's some companies out there that are making movements. I think it's public to address now. One such is Draper and Kramer. Great company, storied history. In the Chicago area. I mean, I'm sure people there.
Yep.
Fantastic company. For whatever reason, their leadership wants to make a pivot and do something different and focus on other things. And so now you have all these, great originators and great branch managers and leaders, who are like, all right, you got to go find a home in 30 days, right? And so, so they're going to look to platforms, that are all in. Look for platforms that can scale and build and take them on immediately. And that's something that, our colleagues, they didn't ask to be put in this position and it just happened. And it's not going to be the last. There's going to be more. There'll be more people whose, owners are, maybe they're getting older, they're getting their 60s, late 60s, 70, and they're like, hey, I'm done. Like, I'm good here. And you just never know that, what opportunity is going to be around there. So that's why you got to constantly be building your platform and be ready for these opportunities when they come up. So I do think there's still tons of opportunity as it relates to technology in fintech. There's a lot of movement out there. I was, generally the venture capital money, kind of slows down when the Fed starts to tighten. I wouldn't say it's lockdown. I don't know if you know, I'm a strategic advisor for Rice Park Capital.
Yep.
Take that hat off as part of the advisory board. I'm also a limited partner, so I've got money committed to that fund, and we're looking at deals constantly. We're constantly seeing things come our way. We're investing in a couple deals here and there. I think it's public knowledge that some money got put into Candor and Perlin, and there's 8 more deals that are going to come. So it's starting to kind of unlock. And I'm not saying it's because of the Fed, but the Fed I don't think I can overstate this enough. The Fed themselves, who they're not always right about the timing of their actions. But once they finally say they're going to do something like, we're going to start raising rates, we're going to stop raising rates, we're going to start to cut rates. When they say they're going to do it, they do it.
Right.
On December 13th, they said in the year 2024, there will be 75 basis points of rate cuts. And so that is a massive shift. They're not lying. They actually said it. They could have lied any time along the way, but they said, hey, progress is made, so much so that we're willing to say that sometime in the next 12 months in 2024, we're going to cut rates by 75 basis points. That could change. My guess is it would probably go up. The number would probably go higher. We're more than sufficiently restrictive. And so the reason why that's such a monumental change, this is not to get into when the Fed's going to cut, this and that and the other, is what it says to the market is that the liquidity drawdown, the liquidity crunch, straining liquidity, tightening, quantitative tightening, that cycle will be coming to an end, and it's coming to an end sooner than we were previously saying. And so whether they start to, maybe stop selling as much bonds and selling off as much mortgage-backed securities and cut the Fed funds rate to make money supply start to grow again and be less restrictive, They've said that, and that actually impacts a lot of what goes on. We buy and sell money. A mortgage is just a mortgage-backed security with, the buyer making the payment into the security with the land and home as collateral. And the secondary market is cold, heartless, and unforgiving. And so if the secondary market is going to start to unfreeze and get a little more liquidity, that's a good thing. That's a good thing for venture capital. It's a good thing for fintech, prop tech. Liquidity is what makes the world go round. Credit is what makes the world go round. And so that signal is a massive shift. The timing of it, how quickly it happens, we could debate about all that. It's kind of fun to do that. But the trajectory has changed. And so things are going to be better in 2024.
I love it. And you always have so many good insights from that perspective. Let's talk. You've talked tech a little bit. One of the things that I love about you as a lender is you're always looking at tech. You know, new solutions, you're looking at proven ones. Talk to me a little bit about what are some of the things that you're looking at from a tech perspective that you think will have an impact in the market in 2024? Is there certain areas of tech? Is there certain types of tech that you think are really going to kind of explode in 24?
So I still think that right now, because we're not fully out of the worst part of the cycle, I mean, it's less bad, right? So
Right.
there's still kind of this heightened prioritization on getting deals in the door. How do you get up funnel on the sales funnel? How do you get to borrowers first? How do you have them find you on social media? How do you have them, whether it's social coach or, whether it's, some kind of technology where it's a website, you got a good website and you can see them, you're actually spending some money. And remember, when rates come down, it gets a little bit more consumer direct-esque for every originator, even if
Right.
you're a traditional originator, right? So there's just more eyeballs out there. They're coming, right? When the Fed cuts the rates, we know that just your average borrower is like, oh, the Fed cuts the rates. That means the interest rates are going down. Well, that's generally actually true. I mean, even though
Not
it's not a one,
necessarily, right?
yeah, you're right. I mean, it's not a one-to-one correlation, right? I mean, they said on December 13th they're gonna cut next year, and rates came down right that moment. So, and by a significant amount actually. So, but they are likely to come down again even more. But just that press that's out there that the Fed is gonna cut, whenever that happens, that will bring a lot of eyeballs. That'll bring a lot of attention to our business. So, what kind of systems in place? What kind of technology are you using to do social selling? The MBA asked me to moderate a panel in New Orleans at the IMB. So we had Ashley, Allie, and Greg were on there with me, and we talked about just social selling in general, some practices that are working for our team, some tips and some tricks and stuff like that. My takeaway was, and this is something I've been saying for a while. You get what you put into something, right? Like I know a lot of people who are on social media will say, well, it's free, so I can just put my phone in front of my face and I can, put a video out there. And when I put it out there, then the loans will come in. And that's generally okay. And it's not a bad start. But as you know, like what we're doing, we're investing some time. We're putting together a nice piece of content. We're recording our conversation. We're trying to provoke each other with thought. And then we're sharing it willingly with our audience. And that may make an impact on someone in our audience, may grow our audience, may give someone an idea where they share back with us, and then we all get stronger together in kind of this collaborative vibe. And that's not free, right? If you talk
Right.
about social media, but when you invest a little bit more, maybe into some technology to help you post a little bit better, or maybe into some video editing. Kevin said too many times, so I had to have my editor spend a couple minutes and knock that out and make this a good video that people would actually listen to. So whatever the case may be, one of my takeaways from that session is that social selling, you get what you put into it, and this is one of those moments that's coming up where there'll be a lot of eyeballs coming into our space looking for information from originators who teach financial literacy at scale, and they'll want to get in touch with us, especially if we're local. And so now's the time to invest in those kinds of things. So when those eyeballs do flood our market, you're capturing your fair share, or even more than you ever have before in your career. So that was a great takeaway. That was an initiative and tied into the panel that we had in New Orleans.
Talk to me about AI, right? There's a lot of buzz about AI. Where do you see AI being implemented? Where do you still think it is still kind of too premature, or lenders aren't ready to invest in it? Where do you think it's having the greatest impact right now?
Well, just to, for about a year, it's been really popular, right, to talk about AI since ChatGPT really came on the scene. So that's a large language model. So what it does is it collects data from all over, and it helps us kind of say things in a way, get through writer's block. Um, excuse me. It helps us basically work on content, get information. My Google search now on my phone, everything that it responds to me when I ask it a question is all generative AI, and so it's all large language model stuff. It's not true intelligence, right? It's not generative where it's thinking. Not yet. There's some rules that you place in there, and you kind of set some things free. But look, I mean, we're a Microsoft shop. So you're starting to see AI inside our teams. I just told you about our, the chat and our Google search. You're
Yep.
starting to see it in some social media apps that use it to help you, create content if you're coming up with ideas like Social Coach or whoever else is out there. And so it's about saving time. It's about coming up with information using artificial intelligence, and it's getting better. I do think it will help with underwriting. I think it will help with task automation. I think it will help with task routing. I think that it's 24/7. It never quits. We're a capacity shop. We've been on capacity for many years, and that chatbot has been gathering information within our walls for several years now, answering questions super quick, routing people to different places. So there's a lot of time saving, and AI is only going to continue to get better. And I can't predict the future because obviously mortgage is so. Once the loan comes in the door, it's still kind of archaic. There's a lot of
Yep.
paperwork in there, and especially on the manual underwrites. If it's a government loan, we're doing the harder loans in the harder neighborhoods, and we're trying to serve the underserved. So I think like some of the repetitive tasks are going to continue to get worked on, whether it's in your imaging system or your document ingestion system, or it's gathering data from this point, this point, this point. We use Halcyon for API. IRS data, so we're grabbing information straight from the IRS, getting information back, in like a heartbeat, as opposed to sending a 4506 and waiting a day or two, and that manual process, mapping those data fields, putting it right inside the LOS, cranking out the information, getting your income calculated, so you can go back to your borrower and say, hey, I've got this thing proved. I've run it through AIM, through Freddie Mac's LPA, or Day One Certainty through Fannie Mae's DU. And remember, we've been talking about this since 2016. On the push button get mortgage commercial.
That's
There's
right.
going to be a day where you never have to ask a borrower to get bank statements or pay stubs, but we're not quite there, but we keep getting closer every day. And all that stuff just makes for a better experience. And so I do think AI continues to build into our business. It is an incremental change. We're a very archaic, slow-moving, business as a whole. But there's a lot of us that are on the forefront that are pushing for these things and trying to make sure that we, pull them into our workflows and just save time, because time is the one commodity where I want the most ROI on. We don't get any of that time back. RIP Dave Stevens, is a big talking point
Right.
at the IMB. You're talking to him, and I'm messaging him at the end of the summer, telling him how much I thanked him. And then 3 weeks later, he's no longer with us. Like, you don't know how much time you have here. You don't know how much time you have to work on the things you work on. And these kinds of things, these gains in perspective on life and on your colleagues and on your business, that's where AI is going to come in and help us. It's going to help us with medicine. It's going to help us fucking beat cancer. It's going to help us with our workflows. It's going to help us with so much stuff. It just takes a little bit of time, but I think it's going to happen a lot quicker than most people think.
I would agree completely. And I think it's going to come up incrementally. You're going to find it in different pockets of where people are getting biggest uplift. Content creation, people can get a quick uplift there. I always say there's two key components if you're going to be successful. You got to be a master at prompts, and then you got to know how to personalize it. Otherwise, it just sounds like it came from an AI engine and everything. Because you're so involved in tech and lending and understanding the economic factors and everything like that, and I love how you talked about early on, some lenders are not going to be investing heavily into tech until they know really the market is turning. What are some tips? What are some advice? How do you vet technology? And if a vendor was going to get you to say, yeah, hey, I should take a look at it. What do you do? How do you factor in and weigh whether I should take the time and make it a priority to vet this tech, or to be honest with you, I don't have time really right now, and let's talk in 6 or 8 months.
Yeah, and that's a perspective that every business has to decide. Like, are they still in cost cutting mode, and maybe they don't want to invest in tech? I mean, people could see it if they work there, right? If they're not trying to continually show new tools and new things and offer new ways to do business and be on the forefront. And so, but again, not every company has to do that. They may have top producers that aren't interested in that. They're maybe more interested in some other value proposition, that like they're building out their non-QM channel, or they're working on training, or whatever the case may be, helping develop business. Whatever it may be, every business leader has to manage their own business in what they see fit. Now, having said that, if you're being choosy because you aren't investing in so many different things, that's actually a good thing too. Then you can 10x down on the few things that you do decide to work on incrementally. And so I think most old school C-level executives are looking for ROI. They're looking for a return, and they're looking for a monetary return. And it's sometimes hard to measure that. It could be like you spend X on this new initiative because your top producers are asking you for it, and it's a retention tool to keep your top production. Right. And so you may not say, I bought this software, I did this, I got this loan in return. It could be, I bought this, I implemented it because my top producers asked me, and they stayed here and they didn't leave. And so, that's ROI. There's ROI there as well. I built this tech, it helped me save time and money on this certain process, and that's a win for the overall enterprise when it comes to profitability. There are a lot of different ways to measure that. And, you do such a good job of coaching people how to just, it does really start with basics. Like, write down your goals. What were you trying to achieve in 23? What did you achieve? What did you fail at? Okay. Do you want to move those things forward into 24? What is your new goal? Does this goal involve anything that has to do with investing in technology, or investing in a new initiative, or investing in your people? And then try and kind of get those aligned and work your way into it. Yeah, it's the end of January here. We're going into February at the end of the week. But it's not too late to be doing this stuff, and it's never too late. We all get very busy. We're about to get really busy with spring purchase season, and of course, eventually with 75 basis points in Fed rate cuts sometime this year or more.
And a pickup in conferences. Hopefully, I'll get to break some bread with you at ICE. Got Housing Wire Annual. And the list could go on and on. There's going to be probably another half dozen to a dozen more conferences in the next 2 months. So hopefully we'll get to see each other in person. All right, I got one last question. It's very important. I want to make sure that I get to this question. You're a Texas guy. You're in Austin. Best go-to barbecue in Austin?
Oh man. Well, I think the easy one to say right now is Franklin Barbecue if you are into beef brisket. So
Yep.
you have to be into beef brisket. There's a lot of good ones. I mean, honestly, like Lambert's downtown is a fantastic place to go. Just grab like a nice meal, and they have good barbecue. You can be in the JW Marriott and go to, I think they have a either Black's or Cooper's right there without having to drive all the way out to Lockhart. So there's a bunch of good ones. Franklin's an experience. You can be waiting in line. They got coffee there.
It's almost like a tailgate, right? I've sat there and you wait a couple hours, and everyone's like, when we were there for MBA Annual a couple years ago, and people are like, you're crazy. Was it worth it? And every time it's a resounding yes for me. It was worth it. The brisket is the best I've ever had.
Well, here in Southern California, my kids had a soccer tournament this week. My 8-year-old, she played in the State Cup for SoCal. We were down in Del Mar, and on the way back, we stopped in San Juan Capistrano. And there's a gentleman from Texas who created a place called Heritage Barbecue right in Old Town San Juan Capistrano. And it's just like that. You wait in line about an hour and 15 minutes, hour and a half. There's a little brewery right next door. They do their own beer and stuff. And, $180 later, I'm getting all this barbecue and bringing it home. Beef rib, 2 pounds of brisket, all the fixins. Because, it's the AFC and NFC championship games this weekend, right? So I want to sit there and hang out. And so I found one decent place to get beef brisket, and it's the similar kind of experience.
Outstanding. KP, you and I could go on forever. You always have so many great insights. I look forward to seeing you on the conference circuit in person. Hopefully we can break some bread. But thank you so much for being a guest on this episode of the FinTech Hunting Podcast.
Thank you, brother. Appreciate it.